So welcome to all of you Shikshat 360, and today basically we will discuss BFM MCQ session set number 8, that is basically belongs from chapter number 18. Clear? That is basically belongs from chapter number 18. Clear? So let's start our discussion and the question number 80. First question of set number 8, that is on your screens now. Question number 80, that is what is the objective? Clear? Basically the objective of monetary policy that is to be followed by the RBI is clear. So here basically we have to find that basically what is the objective. Clear? So basically they are mentioning here 3 points here. First one is controlling the rate of inflation. Second one basically that is making credit available basically to all productive sectors of the economy. Third one is basically ensuring stability of the financial markets. Clear? Third one here, that is basically ensuring stability of the financial markets. Clear? So basically we have to tell basically what is the correct answer here. Clear? Basically what is the correct answer here. So basically what is the objective of the monetary policy? Clear? So first one is controlling the rate of inflation. Clear? This is the objective of the monetary policy or not? Yes, this is the objective. Clear? That is controlling the rate of the inflation basically through basically like repo rate, reverse repo rate. Clear? Like all through these instruments. Clear? So first one is our correct here. Clear? So basically option number D is not the answer here, because the option basically in which first is available, that is to be correct. Second one is basically that is making credit available basically to all the productive sectors of the economy. This is the objective of the monetary policy. No, basically monetary policy objective is basically just to basically we can say that control the rate of inflation. Clear? Or basically stability of the financial markets. Clear? Not basically there is any objective that is basically we have to make credit available basically to all the productive sectors of the economy. Clear? So basically here option number 2 is not correct. Clear? This one is not correct. Clear? So this one is not our answer. This one is not our answer. Clear? So this one is our answer. But basically we will go through the option number C, that is ensuring stability of the financial market. That this one is also true. Clear? Ensuring stability of the financial market. So this one is also true. Clear? So this one is our answer. Clear? Option number C is our answer. Clear? So basically we have to go through that. Clear? You have never studied like basically some students are answering option A. As basically we have discussed the monetary policy. Clear? Under that basically we have never studied like basically the objective of the monetary policy is to making credit available to all the productive sectors of the economy. Clear? You have never go through that point. Clear? Basically under the monetary policy. Clear? Basically this is not any objective of the monetary policy. Clear? Basically and further ensuring stability of the financial markets. Clear? Even if they're mentioning any fourth point, that is basically or that is including, under that basically we have to include foreign exchange markets. Clear? Under that basically we have to include also foreign exchange markets. Clear? Including foreign exchange markets. Clear? So basically they have the responsibility, that is basically stability of the financial markets including the foreign exchange markets. Clear? Basically including the foreign exchange markets. Clear? So basically this is the main objective of the monetary policy that is to be followed by the RBI. Clear? So option number C is the answer. Now move to the next question, question number 81. So which of the following, clear? Basically which of the following liability, clear? Basically which of the following liability is not taken? Clear? Basically which of the following liability is not taken into account, or basically we can say not taken, that is basically excluded. Clear? Basically which of the following liability basically is not taken into account basically for the calculation of CRR. Clear? That is basically excluded basically when basically for the calculation of the CRR. Clear? Basically for the calculation of the CRR. Clear? First one is basically paid up capital and reserves. Second one here, that is basically refinance available basically from the RBI and the apex financial institutions. Third one is basically claims receivables from basically DICGC and ECGC. Clear? So what is the answer? Clear? Basically which of the following liability basically is not taken into account basically for the calculation of CRR? First one is paid up capital and reserves. This one is correct here. Clear? Basically they are excluded. Along with that basically retained profit, sometimes basically they have mentioned, that is also excluded. Second one is basically that is refinance basically available from the RBI and apex financial institution. They are also excluded. Third one is basically claims receivable basically from DICGC or ECGC, basically they are also excluded. Clear? So all are excluded here. Clear? All are excluded here. Basically one I mentioned more that have asked in the examination, like net income tax provision. Clear? Net income tax provision. Clear? Basically this is also excluded. Clear? net income tax provision. Clear? Basically, this is also excluded. Clear? Basically, for while calculating the CRR. Clear? Basically, while calculating the CRR, this is also excluded here. Clear? So, what is the answer here? Clear? Basically, what is the answer here? Clear? All are excluded. Clear? So here all are excluded here. So 81 answer is A option. That is 1, 2, 3 all. Clear? 1, 2, 3 all. Clear? That is basically which of the following liabilities basically not taken. Clear? So basically all are to be not taken here. Clear? All are not to be taken here. Clear? So this one is our answer. Now move to the next question. Question number 82. Very easy question. Hope all of you are able to understand. Clear? Presently, basically, this is to be calculated automatically, but I think all of you are aware regarding the CRR. Clear? So CRR is basically computed based on. Clear? Basically, CRR is basically computed based on. Clear? So basically, how the CRR is to be calculated. Clear? First one is basically DTL. DTL basically stands for, please tell fast. What is the meaning of DTL here? Please respond fast. Basically, what is the meaning of DTL here? DTL basically demand and time liabilities. Clear? Basically, demand and time liabilities. Clear? So not net, sir. If they are mentioning NDTL, that is net demand and time liabilities. DTL basically stands for demand and time liabilities. Clear? So basically there is a difference between that. Clear? There is a difference between that. Clear? That is demand and time liabilities, and that is net demand and time liabilities. Clear? That is basically difference between them. Clear? So basically here one thing basically you have to remember more, that is CRR. Like basically if the present CRR is basically 4%, just basically we are assuming. So CRR basically is 4% of DTL. Clear? CRR is basically of DTL, and SLR, if we can assume that SLR is 20%. Clear? So SLR is basically 20% of NDTL. Clear? SLR is basically 20% of NDTL. Clear? One thing basically you have to remember that. Clear? CRR, that is with respect to the DTL, that is demand and time liabilities. SLR basically with respect to the net demand and time liabilities. Clear? This is a difference. Clear? Basically this is a difference. Clear? CRR is basically calculated basically with respect to the demand and time liabilities. Clear? Basically with respect to the demand and time liabilities. And SLR, that is statutory liquidity ratio, basically is calculated or computed basically on the basis of the net demand and time liabilities. Clear? Basically on the basis of the net demand and time liabilities. Okay. So what is CRR is basically computed based on demand and time liabilities basically as of last Friday of the preceding fortnight. Second one is basically DTL is basically of last Friday of the second preceding fortnight. Clear? So this one is not our answer. Clear? Because here basically we have discussed CRR, and here basically they are mentioning as with respect to the NDTL. Clear? So CRR has not any relation with that. Clear? So what is the answer? That is DTL as of last Friday basically of the second preceding fortnight. Clear? Of the second preceding fortnight. Clear? So option number B is our answer. Clear? Option number B is our answer. Clear? So please remember here. Clear? So I request you once again, please remember here, that is basically you are basically CRR is basically with respect to the DTL and SLR basically with respect to the NDTL. Clear? Basically SLR basically with respect to the NDTL. Clear? So in the place of that, which they are mentioning the SLR, so basically we will go with the option number D. Clear? Basically we will go with the option number D. That is basically as the last Friday of the second preceding fortnight. Clear? That is the last Friday of the second preceding fortnight. Clear? Answer is same basically, but just one thing basically they have different, that is NDTL or DTL. Clear? That is NDTL or DTL. Clear? Now move to the next question. Question number 83. Reverse repo. Clear? That is a reverse repo, that is purchase of securities with the sale agreement. It is a reverse repo. Just basically you have to simply understand basically reverse repo rate. Clear? Basically it is a liability item, asset item, contingent liability item, or contingent asset item. Clear? So what is the answer here? Clear? Reverse repo. Clear? That is purchase of the securities. Clear? Reverse repo, that is basically the purchase of the securities is a liability item, asset item, contingent liability item, or contingent asset item. Clear? First of all, reverse repo, what is that? Asset or liability? Please tell fast. Basically reverse repo. Reverse repo, that is basically we have lending money to the RB, and basically we will get this money back. Clear? Basically we will get this money back. So basically that is an asset. That is the asset of the bank. That is basically comes under the asset item. Clear? Option number B is our answer. Clear? That is asset item. Clear, purchase of securities basically with the sale agreement. Clear, basically purchase of securities that is basically with the sale agreement. It is a basically asset item. Clear, it is a basically asset item. Now move to the next question. Question number 84. Clear, question number 84. Straightforward, easy question. What is the main purpose? Clear, in this, from this chapter you will get basically straightforward questions. So what is the main purpose of establishment of Clearing Corporation of India Limited, that is CCIL? Clear. So what is the main purpose of the establishment of Clearing Corporation of India Limited and National Securities Depository Corporation Limited? Clear, NSDL. Clear, NSDL. Clear. So what is the main purpose of establishment of Clearing Corporation of India Limited, CCIL, and National Securities Depository Corporation Limited? Clear, NSDL. First one is basically to mitigate the counterparty risk, to facilitate settlement system basically among various bank treasuries, to deepen the debt market, all of the above. Clear. So basically these main, what are the main functions? That is basically first of all basically to facilitate the settlement system. Clear, to facilitate the settlement system, and basically if the settlement is to be done on the time. Clear, if the settlement is to be done on the time. So basically it also reduces the counterparty risk. Clear, little bit. Clear, basically it also reduces the counterparty. Clear. So basically all are the purposes. Clear, of basically establishment of the CCIL, National Securities Depository Corporation Limited. Clear. So the correct answer here is to be, that is option number D is the answer. Clear, option number D is the answer here. Now move to the question number 85. Clear, now move to the question number 85, and I request to all of you, clear, all basically who are available here, please answer this question. The interest rate, clear, the interest rate at which, clear, the interest rate basically at which RBI lends money to the banks. Clear, the interest rate basically at which RBI lends, that is the money lended by the RBI basically to the bank. It is called as, that is basically short term, included under the short term lending. Clear. So the interest rate at which basically RBI lends money to the banks, it is called reverse repo rate, MIBOR, or call rate. Clear, the interest rate at which the RBI lends money to the banks, it is called as reverse repo rate, MIBOR, or call rate. Clear. So what is the answer here? The correct answer here, that is basically repo rate. Clear, the correct answer here, that is repo rate. Option number B is the answer. Clear, that is repo rate. Clear, option number B is the answer. Repo rate. So next is very, very important question. Basically, we have to discuss 2 points on the basis of that. Clear, on this basis. Clear, basically we have to discuss 2 points. Clear. So as per the RBI, clear. So as per the RBI, basically banks can borrow. Clear, as per the RBI, make it comma here. So as per the RBI, basically banks can borrow overnight up to a maximum of -% of their net worth. Clear, -% of their net worth. Clear. So basically how much basically banks can borrow. Clear, or basically we can say that net worth, or basically in sometimes basically they are mentioning their capital funds. Clear. There are 2 types of question basically they will ask here: borrow. Second one is lend. How much basically they can borrow and how much basically they can lend. Clear. So as per the RBI, banks can borrow overnight. Clear, basically banks can borrow overnight basically up to a maximum of dash of their net worth. Clear, that is basically 100%. Clear, that is basically 100%. Option number D is the answer. Clear, option number D is the answer. That is 100% of their net worth. Clear, that is basically 100% of their net worth. Clear, that is basically they can borrow. So please tell fast basically how much basically they can lend. Clear, basically how much basically they can lend overnight. Clear, basically to a maximum of, please tell fast what is the answer. How much basically they can lend. How much basically the banks can lend overnight basically to a maximum of basically 25%. Clear, that is basically 25%. The correct term, that is 25% of their capital funds. Clear, that is 25% of their capital funds. Clear, that is borrow they can maximum, that is 100%, and that is lend basically they can 25% of their capital funds. Now move to the next question, that is question number 87. Clear, that is basically question number 87. So Dash is an electronic platform. Clear, Dash is an electronic platform basically for what? For facilitating dealing in. Clear, basically Dash is an electronic platform basically for what? Basically for facilitating dealing in the government securities and money market instruments. Clear, Dash is an electronic platform. Clear, directly straightforward line basically taken from the book. Clear, Dash is an electronic platform basically for facilitating dealing in the government securities and money market instruments. Clear? First one here, that is negotiated dealing system. Second one here, that is Infinet, that is Indian Financial Network. Third one basically that is NSDL, that is National Securities Depository Limited. Fourth one, that is basically SFMS, that is Structured Financial. Clear? SFMS basically stands for Structured Financial Messaging System. Clear? SFMS basically stands for Structured Financial Messaging System. Clear? Structured Financial Messaging System. Clear? So what is the correct answer here? Clear? So what is the correct answer here regarding this question? The correct answer, that is basically negotiated dealing system. Clear? That is negotiated dealing system. Clear? It is an electronic platform. Clear? Negotiated dealing system. Clear? Basically it is an electronic platform for facilitating. Clear? Basically for facilitating basically dealing in the government securities and money market instruments. Clear? Basically money market instrument, that is negotiated dealing system. Clear? And yes. And next question basically they have asked in the examination, that is basically when this system basically introduced. Clear? Basically when this system basically introduced by the RBI. Clear? Basically when this system is introduced by the RBI. So basically this system was introduced by the RBI in February 2002. Clear? In February 2000. Clear? In February 2002. Clear? Basically this system was introduced by the RBI. So the correct answer here is option number A. Now move to the next question, question number 88. Clear? Question number 88. Clear? I request all of you, please remember, clear, basically what things are exempted here under the CRR and SLR, all these types of things, basically they will asking again and again. Clear? So the next question, clear, basically scheduled commercial banks. Clear? Scheduled commercial banks basically are exempted. Clear? Basically scheduled commercial banks are exempted basically from maintaining CRR. Clear? Basically scheduled commercial banks are basically exempted from maintaining CRR. Clear? Basically on the following liabilities. Clear? Basically scheduled commercial banks are basically exempted from maintaining CRR. Clear? Basically on the following liabilities. Clear? On which basically they have exempted. Clear? First one is basically credit balances. Clear? That is credit balances basically under the ECU accounts. Clear? This one is correct or not? This one is correct. Second one is overseas borrowings. Clear? Overseas borrowings. Clear? This one is not correct. Clear? They have not exempted here. Third one is basically minimum of eligible credit. Clear? Basically minimum of eligible credit. This one is correct one. Fourth one is basically outstanding long-term bonds. Clear? Outstanding long-term bonds to finance infrastructure loan. Clear? Basically under that basically they are exempted. Clear? Under that basically they are exempted. Clear? So the correct answer is that is this one is correct, this one is correct, and this one is correct. Clear? So the option number D is the answer. Clear? Option number D is the answer. Clear? Just these are those type of points which you have to remember. Clear? Basically which you have to remember. Only that basically you are able to answer these questions. Clear? Only that basically you are able to answer these questions. Clear? So here basically they are mentioning scheduled commercial banks. Clear? Are exempted basically from maintaining CRR on the following liabilities. Clear? First one is that is credit balances basically in the ECU accounts. Second one is basically overseas borrowing. That one is not correct. Third one is basically minimum of eligible credit. That one is correct. And fourth one, that is outstanding long-term bonds. Clear? Basically to finance the infrastructure loans. Clear? To finance the infrastructure loans. Clear? So A, C, D, all are the correct. Clear? Now move to the question number 89. So the liquidity corridor. Clear? Basically the liquidity corridor that the RBI uses. Clear? The liquidity corridor basically that the RBI uses basically for what? To control the short-term interest rates. Clear? The liquidity corridor. Clear? The liquidity corridor basically that the RBI uses. Clear? That the RBI uses basically for what? To control the short-term interest rates. Clear? Basically to control the short-term interest rates. Clear? It is called as basically short-term. Basically for short-term, basically which thing basically we will use here. Clear? Basically which parameter basically we are using here, that is repo and reverse repo rates. Clear? Basically short-term instruments. Clear? These are basically known as short-term instruments, that is repo and reverse repo rate. Clear? So the correct answer is that is option number A. This one is our correct answer. Now move to the question number 90. Clear? Now move to the question number 90. Very, very important. Clear? I think basically all of you have gone through this question basically in your JAB exam also. Clear? In your JAB exam also. Clear? Because they have asked this type of question. Clear? Frequently in the JAB. So if a banking company, clear, basically I think in the paper 3 legal. So if a banking company, clear, basically if a banking company basically fails to maintain the required amount of SLR. Clear? Basically if any banking company basically fails to maintain the required amount of SLR. Clear? So it shall be liable to pay. Clear? So that bank basically it shall be liable to pay to RB, clear, in respect of that default, clear, that is basically we are not maintaining that much amount, so basically we have liable to pay, clear. So how much the penal interest, clear, basically for that rate, clear, the penal interest basically for that date, for that day basically at the rate of, clear. So how much is the penal interest, clear? So how much is the penal interest, clear, basically for that day at the rate of, that is basically 1%, 2%, 2.5%, or 3%, clear. Even if you're just remembering basically what is the percentage there, clear, that is basically 3%, clear, that is basically 3% here, clear, that the basically it is 3% here, that is 3% per annum above the bank rate, clear, basically above the bank rate on the shortfall, clear, that basically this penalty basically will be charged only on the shortfall amount, clear, basically only on the shortfall amount, clear, that is how much is the amount shortfall, on that basically this penalty will be charged, clear, on that basically this penalty will be charged. And this penalty basically how much is the interest rate, that is basically if the bank rate basically we are saying that basically 6.5%, so basically you are paying that is 9.5%, clear, 9.5%, clear. The interest rate basically 3% per annum above the bank rate, clear, basically 3% per annum basically above the bank rate on the shortfall, clear. So option number D is the answer here, clear, option number D is the answer. Now move to the next question, question number 91, clear, question number 91, clear. So a secure communication backbone, clear, a secure communication backbone for the banking and financial sectors, clear, basically a secure communication backbone basically for the banking and financial sectors, clear. So what is the answer here? Clear, that is a secure communication backbone for the banking and financial sectors, clear, basically a secure communication backbone basically for the banking and financial sectors. A option is Infinet, B option is FMS, third option is NDS, fourth option is STP, clear, that is SDP, clear, STP, clear. So the correct answer is that is basically a secure communication backbone, clear, basically for the banking and financial sector, that is basically Infinet, clear, option number A, that is Infinet, clear. So basically IDRBT, clear, that is Institute for Development and Research in Banking Technology, has developed the Indian Financial Network, clear, Indian Financial Network basically as a secure communication, clear, as a secure communication backbone, clear, as a secure communication backbone basically for the banking and financial sectors, clear, basically for the banking and financial sectors, clear, under the Infinet, clear, basically under the Infinet basically it helps. Infinet basically has helped the introduction of the SFMS, clear. Under the Infinet basically we have introduced the SFMS, that is basically similar to the SWIFT, clear, that is basically similar to the SWIFT. SWIFT is basically used for at the international level and SFMS basically used at the national level, clear, SFMS basically used at the national, or basically we can say the domestic level, clear. Clear. So basically here according to me this one is also correct one, clear. So basically under that basically this is also mentioned, clear, SFMS, clear. So basically it depends upon the question, clear, basically in which way basically they are answering, clear. So both are to be correct here, basically we can say that, clear, Infinet and SFMS, clear, because under the Infinet basically we have SFMS, clear, basically which works here, clear, basically which works here. Now move to the last question of our today's session. Which of the following is an exemption of, clear, basically which of the following basically is an exemption of from DTL calculation, clear, which of the following basically is an exemption basically from the DTL calculation, clear, that is DTL calculation. So first one here, that is basically overseas borrowing, clear, that is basically overseas borrowing. So this one is basically component of the DTL or not? Yes, this one is the component of the DTL, clear. Demand deposit is a component of DTL, that this one is also component of the DTL, clear. Under that basically we have current account, clear, amount basically held in the current account, saving account, or margin money for LC, or overdue fixed deposits, clear, or overdue fixed deposits, clear, all are to be mentioning here, clear, all are to be present here, clear, under the demand deposit, clear. So basically they are not also exemption. This is also not exemption. This is also not exemption. Clear? So this one is not our answer. This one is not our answer. Third one is that is forward outward remittances basically in the transit. Clear? So this one is also not an exemption. Clear? Clear. This one is also not an exemption. Clear. That is foreign outward remittances in the transit. Clear. So basically this one is not our answer. Clear. So only one thing is left, that is option number D, that is net interbank borrowings. Clear. Net interbank borrowings. Clear. So basically this is our answer. Clear. That is basically which of the following in as exemption. Clear. Because all are the main components. Clear. Because above all are the main components of the detail. Clear. Above all are the main components of the detail. Basically this is not the component of the detail. Clear. This is basically not the component of the detail. Clear. So basically this one is our answer. Clear. Option number D is our answer. Clear. Option number D is our answer. Clear. So in this session, basically we have to discuss up to this much point. Clear. Hope all of you are able to understand. Clear. Basically from this chapter, clear. Basically we have already discussed. Mainly theoretical based question will be asked in the examination. Clear. Because these are the points. Clear. Or sometimes basically they will ask case study on the basis of the CRR. Clear. Basically on the basis of the CRR. Clear. Like basically they are giving some components to you and you have to calculate the CRR. Clear. You have to calculate the CRR. Clear. That case study basically we have to also discuss in the upcoming days. Clear. Regarding that. Clear. Basically how we can calculate that is CRR basically is of 4% or 3.5%. Clear. How we can calculate this percentage value. Clear. Basically what are the factors, like basically we have mentioned here, overseas borrowing basically we have to include it or not, demand deposits basically we have to include it or not. Clear. So at that time, basically, we have to take care regarding all these factors, clear, basically while calculating the question, clear, while calculating the question, clear. So in the upcoming days, basically, we will discuss the case studies on the basis of that also, clear. So thanks to all of you basically for attending this session.